Frankly, I didn't think I was going to be able to get you on the line here. I know that once JP Morgan forecast a Bitcoin price of 146,000, you're out there selling all your silver and gold to load up.
The land of Arcadia.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. And a special treat today, because I know our audience has gotten used to seeing Dave Kranzler, silver and gold expert, connoisseur, world-class strategist, and knows everything about the markets. But Dave, first of all, welcome on in here. How are you doing?
Starting in with the BS already. Happy New Year, Chris.
Well, there's the spirit.
Good to see you again. You look good.
Thank you. I got a haircut yesterday, as you can see. You look great
like
too. I heard you cleaned your camera and your thing. You even washed your hair before today's episode. Because frankly, I didn't think I was going to be able to get you on the line here. I know that once JP Morgan forecast a Bitcoin price of 146,000, you're out there selling all your silver and gold to load up. So I appreciate you stopping in here and sharing a few minutes. And since our audience loves seeing you riled up, I'll start with this one and I'll let you take it from there.
What are you asking me a question?
Time for your coffee, man. You're on. You're live, baby.
Are you asking me a question about Bitcoin?
Yeah. How do you feel about $146,000 Bitcoin? Now, JP Morgan said it, so it has to be accurate, right?
I suppose if you put faith in JP Morgan and you follow their investment advice, you'd be more than happy to buy Bitcoin and hold out for 146K plus. I'd like to remind the audience that John McAfee of the McAfee antivirus fame, who's become very estranged, at the beginning of 2019, I believe it was, I wish I had saved the tweet. He tweeted out, because he's a big Bitcoin guy, he tweeted out that if Bitcoin wasn't at $1 million by the end of 2020, he would eat his genitals. And you know what? I mean, he fell down on that promise. So I don't know. Bitcoin is what it is. The way that I look at it, it's not a substitute for gold. It's not something that the monetary system will be based on ever. My guess is if there's going to be some type of blockchain-based digital currency, the central banks are the ones who are going to issue it and roll it out. In my opinion, that makes it, still a fiat currency. And contrary to the claims that have been bandied about, Bitcoin is riddled with counterparty risk. You don't have counterparty risk when you hold physical gold and silver in your own possession. There's no counterparty risk. Its value is timeless. At least it's been timeless over 5,000-6,000 years. So I honestly, do I wish I had gotten involved in getting long like Grayscale, the Grayscale ETH or whatever it is when Bitcoin was under 10,000? Yeah, sure. I'd be an idiot not to, to deny that. Same thing with, do I regret not buying Tesla shares when they were down at split adjusted $36 in last March, 2020 March. So, I mean, there's a difference between, chasing a trade for, to try and find, the next higher buyer and flip the trade out. I mean, I'd be very surprised if most of the guys that own Bitcoin at this price level have owned it, not, without selling it since 3,000 or 10,000. So, and then there's buying something for wealth preservation, which I don't know if Bitcoin does that or not. I guess we'll find out over time. And buying something for, possible investment appreciation based on fundamental analysis, and gold and silver fit both wealth preservation and, in my opinion, they are undervalued, and you can use several different benchmarks to judge for yourself whether or not gold and silver are undervalued. I mean, you just use the money supply, for instance. And so that's what I choose to put my money in and hold for the long term.
Yeah, and
Honestly, I don't really have time to try and, trade Bitcoin. And we know what Warren Buffett, I usually don't agree with Warren Buffett on a lot of things, but he called Bitcoin rat poison. So,
although Dave, I think if you saw
take that
how
as you will. I'm not saying that that's my opinion. I'm trying to be a Mount Olympus here because Bitcoin is it's certainly a more inflammatory subject than politics and religion right now.
well, let's not let's not get crazy. I mean, look at who well, I guess we're not allowed to talk about presidents on YouTube anymore. So we'll leave that aside. Although in terms of trading Bitcoin, Dave, I may be calling you again and again over coming months. When you see how wide some of these spreads are, although, wow, actually it looks like the January spreads are a bit tighter than some of the other ones, but here, there's 8,000 at 10,000, which actually isn't terribly wide given that we're talking about a $27,000 spot price. So at the higher spot price, the volatility does get a little bit.
Well, what's the percentage bid-ask spread?
Yeah, but anyway, I'll take a look at that later. I think there's going to be some fun stuff to do in there. Although, Dave, I couldn't resist. You mentioned Tesla. And I was thinking that might be worth trying to extrapolate time travel just so I could, go back in time. I wonder what would happen. Like, let's say you could go back here at, September of 2019 when it was $45. Let's say you knew it was going to go up to 770. Like, would you have been able to pull the trigger? Would your finger have just started burning, pressing the buy button to pick up Tesla shares?
You mean with the benefit of hindsight?
Even if you knew, like, let's say Tesla's going to go to 7,000 and you knew that, would you be able to buy Tesla, or is that just too antithetical?
Well, if I knew it was going to go to 7,000, yeah, of course I'd buy it.
All
Wouldn't
right.
you?
Well, I'd probably just enjoy imagining you.
But again, it's not, I wouldn't be buying it for fundamental reasons. I mean, on a fundamental analysis basis, Tesla is not even worth $50.
Yeah, well, it's interesting.
I can demonstrate that numerically. I mean, I demonstrate it every week to my Short Sellers Journal subscribers. So, I mean, markets are irrational. They can become extremely irrational, and this is the poster child for irrationality in the stock market. And no one knows when this thing is going to rip and reverse, but when it does, it's going to cause a lot of damage. It's going to be like, the Robin Hood traders who think they're experts because they've been trading since March. They're going to be leveled like Pompeii was.
Unless they're watching Dave's Silver and Gold Market weekly update, which could mitigate.
There's a smoking volcano in the background, and they don't even see it. They don't even realize it. Can't happen to me.
Yeah. Well, I wonder if they pick up on the random coincidence. Dave, do you think there's any connection that from 45 to 772, which I get as a 17 bagger, is there any connection between the Fed starting swap lines right at that exact same time and Tesla going up 17-fold over the next 15 months?
Yeah, I mean, it's a direct connection between the Fed printing money. I mean, the Fed has been the most prolific money printer of any central bank since September 2019. So, I mean, you can do the analysis yourself. Just go to the St. Louis Fed website, and you can see the correlation between you can build a chart that shows the correlation between M1 or M2 or whatever you want to use, and MZ, the monetary base, and the S&P 500.
Yep.
I mean, the stock bubble that we're in right now is the same type of beast that we were in the late 1990s. That abruptly crashed in March of 2000. But it's multiples larger because the money supply is many multiples larger than it was back then. I mean, the scale of the amount of money Greenspan printed in the late 1990s is minuscule compared to what the Fed's printed since 2008.
Yeah, it's funny you mentioned that, Dave. I've been trying to find a chart that shows the money supply or the Fed's balance sheet all the way back to 1913.
By the way, you said Tesla has been a 17 bagger.
Yep.
Well, guess what? There's a stock called Silvercrest Metals that I recommended to my subscribers in
Yeah.
January 2016 at 16 cents. Silvercrest right now is 11.41, and I'm just using $11 as the bench. That's a 68 bagger. And Silvercrest Metals has fundamental intrinsic value and substance behind it.
Dave,
Tesla is a viper's
I'm gonna
nest of
dispute
accounting
that.
fraud and likely operational fraud.
Dave,
So anyway,
I'm going to dispute what you were saying. You're not a 68 bagger, Dave. You're a 71.3 bagger. So let's
There
not
we
lose
go.
track of those extra 3.3 bags that you've scored on your Silvercrest call. But Dave, have you ever seen? Is there somewhere we can find a 100-year chart? Because it's like this looks bad as it is, but I think when you can't see, only goes back to.
well, I think you'd only want to take this chart back to 1971.
Well, I just think that when you show it in scale, seeing that from the first 100 years we got to here, which is 900 billion, and then
Well,
in the
that
last
probably
15
wasn't the
years
first
we
100
went up.
years. That might have been since the 1970s. I don't know what.
From when the Fed was around. I'm just saying from when they started to 2008. We thought that was a lot, and then
They were constricted by the size of their balance sheet by the gold standard.
Well, why let that get in the way, right?
Well, they didn't. I mean, it actually, the dollar started being slowly removed from the gold standard, believe it or not, under President Lincoln.
Yeah, well, it's been going on for a long time and doesn't seem an end anywhere in sight. Although another question I had written down here for you, and then we're going to hit some reader questions today from your fan club, Dave. So cool. But we hear a lot about with Bitcoin, people are calling it digital gold. And something that I've heard, I know you've heard this a lot, people say that a lot of the money that would have gone into gold and silver has gone into Bitcoin instead. I mean, I guess I'm not saying that's wrong. I don't know if I think that's a big factor, but what do you say?
Hey, digital gold? No, it's not digital gold.
Well, I knew you would say that, but do you think that the money going into Bitcoin, that gold would have been higher if Bitcoin didn't exist? Or how would you see that?
Well, I can answer that question in two ways. Yes. So, for instance, in 1970, gold futures didn't exist until 1974.
Yes.
Okay, not coincidentally, 3 years after the gold window was closed. And, just
We
to
didn't need
remind you,
futures. We had the London gold pool to bring in.
Nixon said the closure would be temporary. So I guess in this scale of universal time, what are we at now? 50 years? 50 years off the gold standard. I suppose in universal historical time, 50 years is probably temporary, but I don't think he meant it in that context. But at any rate, and I think I've mentioned this before on here, if you go to the GATA website, there's in their archives, you can actually find the letters that have been declassified. There were letters going back and forth between Henry Kissinger and his economic advisors. I think maybe the Treasury Secretary might have been involved, possibly Arthur Burns. I don't remember, but and they talk about the need to try and find a way to direct institutional money away from physical gold and into some type of gold surrogate. And that's why gold futures were created, and they were rolled out in 1974. That would not be, Bitcoin wouldn't be a precedence for finding something that's useful for diverting large sums of cash flows away from buying physical gold. And that was the same thing with the GLD trust. when it came out. 2004, I believe, is when it IPO'd. And that was certainly, I mean, there's no way you could liken GLD to even remotely close to investing in physical gold. But it certainly sucked up a lot of cash that, if it needed to or wanted to invest in gold, would ultimately have to buy physical gold. So I kind of have a little bit of a theory here that the central banks and the sovereign governments tolerate Bitcoin going higher like this and getting attention and putting attention on the fact that people are buying Bitcoin as a way to get out of the dollar, because that itself distracts from gold, and it diverts cash that might otherwise flow into gold. Now, I don't think guys like Paul Tudor Jones are buying Bitcoin because they think it's a digital gold. I think they're buying Bitcoin because they knew that there could be a short squeeze that would be engineered, and that, because I think Tudor Jones got in when it was around 10 or 12,000. I wouldn't be surprised if he's taking profits here, like big profits.
Yeah, well,
I don't know that for sure. I'm just speculating, but from just for me, Bitcoin doesn't pass the intellectual test as being, a gold substitute, or even long-term wealth preservation, long-term wealth preservation asset.
yeah.
And aside from all that, it's just not as liquid as gold. Gold and silver are extremely liquid. Anytime I want to sell my gold and silver, I can put it on Craigslist, or I can just drive down to the local coin shop, and they'll pay me cash right on the spot for as much as I want to sell them.
Well, I hear you on that, and certainly will be interesting to follow. I wonder, if Bitcoin is rising, people might see, what's that silver stuff? Maybe that could be a great way of diversifying. But anyway, Dave, we got to keep moving.
And by the way, I just so the audience, because I'm sure there's going to be nasty comments in the comments section from Bitcoin adherents. I'm not denigrating Bitcoin. I'm just saying it's not for me, and I don't believe that it's a gold substitute.
All right. Well, fair enough. I only want your honest opinion, as always.
Really a great trading vehicle right now.
Yeah. Well, that's why we'll talk more Bitcoin options soon. Although no time for that now, Dave, because we have reader questions. Everybody wants to know what Dave thinks. And here, if GLD, SLV, and the COMEX itself are going to get trapped with no physical to show for audit or delivery contracts, what is the process, or what happens to the thousands of people who currently hold stocks or options in SLV or GLD? And what's the practical implications of trading those vehicles and alternative options?
I'm not quite sure I understand the question.
I can let me put that in different context. Then you've talked often about how you wouldn't touch GLD or SLV with a 100-ounce bar. You see what I did there? That was slick, right? So I think what he's getting at is that, all right, if it turns out that metal isn't there, or the sufficient metal isn't on the COMEX, I think he's saying what's going to happen to the people who own those stocks or options on those assets.
That's what I thought he was asking, or she. I've always thought, and this goes back 15 years, I thought a really interesting pair trade for a big hedge fund would be to load up on physical gold and short GLD against it. Well, first of all, GLD loses value every day anyway, and so that's why when you look at the price of GLD, wherever it is right now, that's why it doesn't if you multiply it by 10, it doesn't correlate with the current price of gold. GLD is at 178, and gold is at February gold is at 1908. So there's a spread there, right? So GLD hasn't even tracked the performance of gold since it was issued. Okay, and the reason is because they take the expenses out of the assets to pay the expenses. So there's natural, albeit it's very slow. I mean, so you've had you've had what, about $130 of slippage between the correlation between GLD and gold over 16 years, 17 years, so 16 and a half years, whatever. So that in and of itself means it's not a good surrogate for gold. I mean, obviously, that's a minor detail compared to the real reasons, but at some point, if it's ever revealed that it doesn't have the gold that it purports to have, you'll wake up one day and the price of gold is going to have shot straight up, and the GLD probably gets cut in half in the market on the same day. Maybe not cut in half, but over time it certainly would sell off, because I think people will get the hell out of it. So now that doesn't mean it's not a perfectly valid vehicle for now for indexing the movement in the price of gold, right? So I mean, if and I assume the person who asked the question is talking about short-term trading, because they're asking about options, puts and calls. Yeah, I mean, I've been in and out of puts and calls on GLD and SLV before, but I certainly wouldn't buy GL, especially, if I was a big mutual fund manager. Oh, hey, we need to have 5% in gold. I wouldn't buy GLD because it's a ticking time bomb.
Yeah, and Dave, you mentioned the slippage in there between the gold price and the actual GLD price. But let's be fair. Remember, HSBC needs to snort their cut. So you got to price that in as well. We do have one more reader question there for you, Dave, before we wrap up today. And this is right in your wheelhouse. Someone was asking about jurisdictional risk in Mexico. I guess similar to here, our government's going to confiscate things, assets, stocks, projects. If you could touch on Mexico, and if there's any other jurisdictions you'd like to add to as well.
It's a great topic, and timely topic with reference to Mexico. What I find interesting is that when people talk about jurisdictional risk, they're worried about the sovereign risk, sovereign level, federal or national government level risk. And since I've been involved in this sector, I think the only country where I've seen sovereign risk being an issue is Venezuela. And it's a long story, I won't go into it, but it didn't affect all the mining companies there. So in my experience, and I've been bitten in the ass several times, not several times, but 3 or 4 times by jurisdictional risk, where the risk lies primarily is at the local level, the provincial level, or say the state level if you're in the United States.
Yeah.
And for instance, down in Mexico, Almaden Minerals just got the stock got whaled on because its first iteration at trying to get an environmental permit in the jurisdiction where it operates was denied by the environmental authority down there. And what's interesting is that not all of the states down there require federal approval for environmental permits. If you're certain states down there, you're good to go if you get an environmental permit at the state level. Well, the state where Almaden's Ixtaca project requires federal approval, and so and as it turns out, the person who's running the federal environmental agency there has openly said she doesn't like open pit mines, and that's what their project's modeled out to be. Now they can. There's a lot of issues going on there, and I cover it in depth in my mining stock journal. But needless to say, eventually that project's going to be converted into a mine, and a very valuable mine. The current head of the environmental agency there, Semernat, and I forget what Semernat stands for, But she's like the third one since AMLO got elected. So she's the third one in 2 years. So, and that's not to say that they can't resubmit their environmental application, permit application with the current person who's in charge. As it turns out, it looks like it was a completely politically motivated decision. But again, that was jurisdictional risk that occurred at the state level. And I've had that happen to me in the Dominican Republic at the jurisdictional level, and in Guatemala at the jurisdictional level. So that's where I think you need to really be more worried about political risk is in the the local level where the mine project is being built or where there's an operating mine. If there's already an operating mine in a jurisdiction, there's a better chance that a developing mine will get all the necessary permits, but it doesn't guarantee it. And like the situation in Guatemala, we saw it was one of the largest silver mines in the world, representing about 1% of Guatemala's GDP, and it got shut down by the local court. And a lot of the activity that goes on at the local level is politically driven by, believe it or not, US-based NGOs.
Of course.
And that's what happened in Guatemala, and that's what's happening down in Mexico right now. So, jurisdictional risk is a risk in every single country in the world, and there's varying degrees. I mean, I wouldn't invest in anything in Congo or whatever they call it now, the Dominican or the Democratic Republic of whatever they call it. I think they call it the Democratic Republic of Congo. I wouldn't necessarily refer to their political system as a democratic republic, but I wouldn't invest in a project there. But there's plenty of really large multinational mining companies operating there, and they've been operating there. So it's really a case-by-case basis, and it's not, you can't just, write off a country just because you don't agree with their political leader, or maybe their political leader's a tyrant. That doesn't necessarily mean that he's not going to let mines operate there, because that's where they get tax revenues from in a lot of these countries, and even in the United States, there's plenty of jurisdictional risk here. It takes forever to get permitted in Arizona.
I mean, if you rule out any jurisdiction with a tyrannical government, I mean, I guess you're never going to invest in anything. So,
right, there you go.
Although, fortunately, Dave, I know obviously there's a lot of stuff to keep track with in these stocks than jurisdictional risk. I mean, that's something that you can't know overnight, but from years and decades of looking into these things, you can ascertain, which is what I enjoy about your mining stock journal. And perhaps before we wrap up, you could let folks know what they get there.
It's pretty simple. I put out a new issue every 2 weeks with a little bit of market commentary that you may or may not disagree. You may or may not.
Where's the truck?
I update the.
Where's the truck?
I don't know.
Move to the side. What's up with that?
I don't know.
I'm going to get you the silver truck, though. Don't worry. I made a note. I'm really going to do it this time.
All right. Maybe it's lower on the screen.
I don't see it. Oh, there it is. It was still low.
Yeah. So, and I update all the names that I cover and recommend, if there's something to update. And then if I have a good new idea, I'll present that. I usually don't like to present new ideas until I've chatted with management in depth, but I actually have an idea this week that I'm going to put in there. It's been a somewhat promoted idea already, but I think it could be a good idea. I'm going to put it in there with the caveat that I haven't been able to get a hold of the management yet to chat with them, but and then I also, it's not just juniors. I put in idea when I think I see a trading opportunity in large cap mining stocks. I mentioned that, and I suggest ways to take advantage of it with call options.
Well, I appreciate that. I enjoy reading it. And folks, you can find that at the link in the description field right below there. I'll give you a week off on the pointer, Dave. I got you covered this time.
Thanks.
Fortunately for folks at home, Dave, your buddy Trevor Hall, who runs your co-partner at the Mining Stock Daily podcast, He was on the show a couple of days ago talking about how it seems like the market is realizing that this dollar emperor is pretty darn naked. And to find out more about that, well, that video is coming your way now.